My name is Ntombela PP from Majuba College. Today's lesson is about departmental account. By the end of this lesson, we'll be able to define what is departmental account, identify the advantage of departmental account, identify the aims of departmental account, also identify the profit and loss account, able to draw up departmental purchases trading account, draw up departmental trading statement, and draw up departmental income statement. What is departmental account? It is where the business with diverse trading activities are conducted under the same roof and is usually divided into several departments, and each department deals with a particular kind of goods or services. For example, one shop has a women's section and children's section. Advantage of departmental account. Individual results of each department can be known, which help to compare the performances among all departments. That is, trading results can be compared. Departmental account helps to understand or locate the sources, failures, rate of profits, etc. It also helps the management to make proper plan of action policies in order to increase profits after analyzing the results of operation of various departments. It also helps to understand which department should be expanded. It also helps to encourage a healthy competitive spirit among the various departments in order to maximize the profit. As detailed information about the firm is available from Department Accounting, the users of accounting information such as auditors and investors are widely benefited. The objectives of departmental accounting. It aims to evaluate the performance of each department. It assists to formulate policy in order to extend or develop the enterprise in a proper line. It also assists to reward departmental managers on the basis of departmental results. Also to check out interdepartmental performance and to maximize the gross profit of each department. Profit and loss account. Each department maintains its profit and loss account. Each department prepares its trading profit and loss account. Finally, the profit or loss of each department will be transferred to profit and loss account for the business. Departmentalization of expenses. In order to ascertain the profit or loss made by each department, it is necessary that each department is charged with a proper share of various business expenses. The following basis may be adopted for departmentalization of such direct or indirect expenses. Direct expenses incurred specifically for particular department should be directly charged to that department. For example, salaries, electricity bill, insurance rate, rent, compensation fund for that particular department. Indirect expenses, which is where we talk about auditor's fee, director's fee, debentures, interest, all those they go to profit and loss account. Here is the exercise that we're going to do, which require us to prepare departmental purchases account and departmental trading statement for this business. It has two departments, stationery department and equipment department. They gave us this information to be used. They also gave us the additional information to be used in order to prepare this one. Departmental purchases account. Step 1. For a departmental purchases account, it is an asset. As we know, all assets, they increase on the debit side. That's why the totals of this account are on the debit side. When you get this total, you go to additional information, purchases were given, stationery, the total is 99,210, for equipment is 175,000. For the totals that you put on the debit side, then you add them to get this total. Then for all other expenses, they go to the credit side. For number 1, under additional information, transaction number 1 talks about closing stock. Number 2 talks about donation, the computer that was donated to Hillcrest Hospice. That donation affect our purchases that we need to take in consideration. Is a minus from equipment department, because it talks about computer that was donated. You write these other details on the donation. Then for equipment is 4,750. You put the total. Then you go for another one, carriage on still June. So this one's not going there. Number 4, a case register was transferred to the stationery department, amount of 9,000. Bear in mind, guys, the transfer, it affects 2 departments. It's not like in a donation case, because in a donation is where things, the goods are moved out from that particular department to other people, not within the business. Whereas when you transfer goods from one department to another department, which means where the goods has been moved to is going to be a plus. Where goods are from, it's going to be minus. Is what the principle apply, double entry principle. Then we're going to transfer the goods from equipment. That's why we're having the equipment on the credit side. On the debit side of departmental is plus. We need to add this 9,000 because it was moved from equipment to stationery. That's why we're having transfer both sides. Then the lastly talks about some books which were taken for owner's wife, amount of 1,550. That we call it drawings. Again, it affects our purchases, drawings, and stationery. You put that amount. Thereafter, we are done because this was the last one under additional information. Then you have to add up all those amounts, get the totals, as I've done here. The equipment is 175,000, stationery 108,000. The total of a bigger site. Then you come up with this total, you put on the side again. You subtract all those amounts on top from this one. That's why you are left with these balances, 106 balances. These balances, you're going to need them when you prepare your departmental statement and the purchases account. Then we are done for this one. Then the number 2 you're required to do is departmental trading statement. To prepare a trading statement, you follow the income statement format. You start with the sales less cost of sales and the gross profit. In this case, which is where you end. Your sales here is 420. Where you get those sales, you go to given information. In that given information, there is 420,000 for stationery. For equipment, it's 612,000. But before you write those one, you need to check whether you got the sales returns. There is one for equipment return, sales returns. You got a sales for equipment. Stationery is fine. It's 420,000. But for equipment, you need to subtract that amount of what those are your returns. It's going to 612,000 minus 5,250. That's why we left with 606,750 is how you write your sales. Then for cost of sales, you need to consider opening stock, purchases, carriage and purchases, duty, import duties. Opening stock again is a matter of going on the given information. There is it here in the beginning of the year. It was 115,000 for stationery, 250,000 for equipment department. Purchases account, you just go to the previously exercise, you copy this amount as is because we already calculated them. For carriage and purchases, you go to your given information. Carriage and purchases, there is it here, 9,323,000. But before then, there is one additional information. Transaction talks about carriage and purchases. Number 3, carriage is still due for equipment that was purchased, amount of 1,630. That amount need to be added on the carriage and purchases for equipment department, which means under equipment department we're having 23,150 plus 1,630. That's why we're having 24,780. This one there was no transaction for stationery department. The import duties again, where you get the amount for import duties, you get it here. Import duties, we take them as it is because we don't have any additional information regards to import duties, which means you copy them as it is. 2,380, 9,770. That's why we're having import duties like this. Then this is for you now is to add opening stock, purchases, carriage and purchases, and import duties. We add them up, we get this total. Then we say less closing stock. Closing stock, we get it from additional information. There is it here. For stationery, it's 48,000. Equipment is 95,000. Copy it as is. But before then, you're going to say total, this total, subtract the closing stock. Then the amount that we're getting there is the cost of sales. You put it up here. Then you're going to say sales minus cost of sales. Then you get a gross profit, this one. I think it's clear. Good luck, guys. That was part 1. We'll meet during the part 2 of this exercise.